Let me ask you to do a simple exercise, which most of you would get wrong. The exercise is very simple. Look at your monthly purchase basket, the common items that you purchase on a monthly basis, and try to identify the class of items which faces maximum volatility in the prices. You'll be surprised to know it's vegetables. Something that might cost you 20 rupees a kg today, it might cost you 100 rupees a kg in few months from now. And this will not be a one-time event. This is an event which will repeat every year when some specific circumstances happen. There will be a pattern to that. If you are a consumer, it's bad for you. But if you are a farmer or if you are trying to venture into a business in farming, you can actually build a model around this where you target off-season production and make profit when the prices are double, triple, or maybe 4 or 5 times. In today's video, I'm going to talk to you about such a business model. This is a detailed video about off-season farming business model. In this model, we'll cover what kind of investment does it take to get into this kind of business. Then we will also cover what are the operational costs, how much revenue you can generate, what are the kind of profits you can make. In essence, what is the return on investment that you can expect by getting into this kind of business model. We'll also cover the kind of crops that you can grow in this business model to make higher profits. We will also cover financing aspects, how much money you need to bring from your side and how much you can get from loan through different financial institutes. We will also cover the benefits or the schemes which government has to help you in this business model. So government actually gives you money for this business and government also helps you lower the rate of interest on the loan that you take. If you want to know all these things, watch this video till the end. And if after that you still have some questions which are unanswered or if you have some queries, then use the comment section, write your queries there and I will reply to all of your questions. Now let us cover the first part. How much investment does it take to set up a off-season farming business model? For this example, I will take a size of 1 acre. And why I'm taking 1 acre is because this is also the minimum size which is required by the government to be eligible for any benefit that the government is giving. When you think about creating a farming infrastructure, one question that you might have is, what all does it include? Where should I put my money and where I should not put my money? Now, this can be very confusing for a layman, so I'll try to make it simple for you. We divide it into 3 different categories: structure, system, and technology. The first part of investment which goes into creating the infrastructure for our off-season farming project is creating the right environment or right climate, which is done through polyhouse. So that is what comes under the structure. How do we create the right climate for the plants to grow? Once you have made your decision around the structure, the next decision that you need to make is, what is the kind of technology that you will use to grow the plants? Will you grow them in soil? Will you grow them in coco peat, which is like soil but are sterilized media? Will you grow them in water using hydroponics or will you grow them in air using aeroponics? That is the second part which we call system, the growing system that you will use to grow your plants. Once you have made these 2 decisions, the next decision that you have to make is what kind or what level of technology you are going to put in your farm. Do you want to run it completely on a manual basis or you want to run it 100% using technology, or you want to find a balance between the two? All these decisions come under the third bucket, which is the technology bucket. So essentially a farming infrastructure project will have 3 buckets. One is structure, the second one is system, and the third one is technology. Having understood these 3 components, now let's understand how much it might cost to set up such a farm and how much each of these components might cost you. Please understand, I'm going to talk about the 1 acre farm, and the numbers that I'm going to talk to you about are generic numbers, average numbers. Depending upon how you set it up, it might cost you more or less. Now, if you take a general average case, structure might cost you around 60 to 65 lakh for this kind of a setup. The growing system, and let's for this example say we are going to use coco peat based system, it might cost you around 20 lakhs for an acre. And on technology level, depending upon the kind of involvement you want, I'm assuming you are a busy professional and you don't want to leave your job and do farming 100% of the time. You want to rely on technology when you start. I'm putting a number of around 15 lakh for that. So overall, looking at all these 3 components, it might cost you around 1 crore in the infrastructure cost to set this project up. This 1 crore will go towards structure, system and technology, but this is not the only money you will spend. On top of that, you will also have to pay GST and government taxes. Then there will be out-of-pocket expenses, for example, for leveling your land, for creating a boundary, for putting power backup, for putting a chiller if it's required for your land, for putting an RO system. So these all little costs will keep adding up. Overall, you should keep a budget of around 1.3 crores for a 1 acre farming project for off-season farming at 2026 cost structure. Once we know the investment, now let's move towards the profitability, or what are the revenue and expenses for this farm. Now, one good thing is, since it's an off-season farm, what we will do is we will grow the produce which is not available in the market during that season. For this particular farm, I'm taking example of 3 crops. The most profitable crop is colored capsicum. So we'll grow it during the off season, during summers when it's not available in the market, when the prices can shoot upwards of 200 rupees per kg. That is when we will grow colored capsicum. During season, when everyone can grow colored capsicum, we will not grow colored capsicum. At that point in time, we will either go for cherry tomatoes or we'll grow zucchini. Now, by growing these kind of crops in a 1 acre, we can expect a revenue of somewhere around 50 to 55 lakh per year. 50 to 55 lakh is the revenue that this project can generate on an annual basis. But this project will also have cost, and the cost will be high. The biggest cost factor for this kind of farm will be electricity. Since it's climate control, whether it's winter or summer, electricity bill is going to be high for this kind of farm. The second biggest cost factor will be the manpower. And when we are setting up this farm, you should equip it right, you should keep the right amount of labor, and you should keep a right manager to run this farm. And if we add up all the other costs like seeds, nutrients, and everything, every year you will look at an outgo of anywhere between 24 to 28 lakhs. Now, if you look at the revenue and if you look at the expenses, this kind of project can generate a return of around 20 to 22% on an annual basis in the long term. Now, this may be a good return for someone, this may not be a good return for someone, but this is a return which you are getting if you're not taking any government benefits. There are benefits which are provided by the government, which if you add to it, the return improves. This brings me to the next part of the video. How to finance this project and what are the financial benefits that the government can provide. If you want to finance this project through loan, most of the banks will ask you to bring around 25% of capital from your side and they will give 75% of the money in terms of loan. For a 1.3 crore project, that will mean around 35 lakh will come from your side. If you also want to add some buffer and if you want to make sure that you have enough working capital before the project starts making money, let's say you need to keep a buffer of around 50 lakh. So 50 lakh is an investment that needs to come from your side. And the balance can come through a loan, through a nationalized bank or even through a private bank. This is for a project which is not yet funded by the government. On top of this loan which you are getting from the bank, the government also gives you further incentive. For the 1 acre project that we are talking about, it is eligible to get 27.5 lakh in subsidy from the government. This is free money which comes to your project, which you don't have to pay back to the government. This is subsidy that you get. On top of that, the loan that you are taking, there's a fixed interest rate of 9% if you take this loan under Agriculture Infrastructure Fund scheme. And out of this 9%, 3% is something which will be paid by the government and you will only be paying 6%. So essentially, government is giving you two benefits. For this particular project, which will cost 1.3 crore, government is giving 27.5 lakhs plus whatever loan you are going to take from the bank, the net interest rate on that will be a 6% that you will have to pay from your side, which makes the financials very lucrative. And the ROI, which was sitting at 20 to 22%, if you add these things, that ROI now becomes somewhere around 25 to 28%. And add to that fact that this money that you are making, it's an agriculture income, which means it will be taxed either at zero rate or at a lower rate depending upon what are your other sources of revenue. Your actual net income or actual net returns that you are taking, that you are making, will sit upwards of 30%. If you want to improve this project even further, what we have talked so far is about 1 acre project. Let's say instead of 1 acre, we do a 1 hectare project. 1 hectare is 2.5 acre. So instead of 1 acre, we are doing a 2.5 acre project. The investment of 1.3 crore will almost double. It will become 2.6 crore. But the beauty of the fact is where your investment is doubling, the revenue is not becoming double. Since your land is now 2.5x, the revenue will become somewhere around 2.5x. And the cost still will not double. You will not double the salaries. You will not use double of nutrients. You will not use double of electricity. Overall, your profitability will increase at a rapid rate. The government subsidy, on the other hand, will actually be 2.5x. So you'll get pro rata the right amount of subsidy for this. And if you add all of that together, then the ROI, which was sitting at 22% for a 1 acre project, will sit around 32% here. And if you look at the subsidy benefit, we are talking about an ROI which is somewhere near 40%. If you have been a businessman, if you have run different kind of business and you are looking at diversification, this may be a good option for you to diversify because it helps you get into a business which is going to be evergreen, which is now gearing up in India. This is a business which helps you generate tax-free income, which helps you generate much high returns, and which is also a business which is a sort of recession proof because no matter what happens, people will keep eating food. If you find this content interesting, you can subscribe to my channel. And if you have any questions, if you want me to cover something else, if you want me to cover some other business models for farming, do write in comments and I will try to cover all of those. Thank you, take care, and hope this was useful for you. Goodbye.